Alrighty, so today we saw extended selling pressure for Tesla, which if you guys saw my video yesterday, this is exactly what I was talking about. Now, for those of you guys that are brand new to the channel, I would highly recommend subscribing, as I have been saying this for a while now that yes, I'm bullish on Tesla in the long term, but in the short term, I've been very bearish, specifically ever since the earnings. While Tesla did beat its earnings, I often say that earnings are very nuanced, and there's a lot more to it than just beating its earnings, especially when there has been a lot of downward revisions to these earnings. And so what did we see with Tesla from a fundamental level? Well, we saw that profit margins were compressed. Along with that, we had a series of unfavorable economic data. And then from a technical standpoint, we've also seen that Tesla has been getting rejected by this downward trend line. And so I understand that when I talk about Tesla going downwards, a lot of individuals do get frustrated with that, right? They call me a bear, that, I don't know what I'm talking about, but it's completely understandable. There's definitely a lot of zealotry when it comes to Tesla. In fact, if you go on YouTube, you'll see that there's a bunch of channels where any data that comes out with Tesla, any catalyst event, they try to spin it off as it's the reason why Tesla's going to go off to the moon. And one of the things you have to understand is that, yes, catalyst events play a significant role to the markets, but the financial markets are much more complex than we tend to give them credit for. And you can't just look at some small news for Tesla and say, well, Tesla's going to go to the moon. I mean, I've literally seen in the past week someone complaining on how they don't understand, and this is on YouTube. I'm not going to say names because that would be a poor reflection of my character, but I saw someone complain how Tesla should be at all-time highs right now, especially because of the Cybertruck production starting, and that's honestly laughable, right? Now, I am bullish on the Cybertruck. I'm very optimistic, but you can't just say, oh, Tesla's starting the production on Cybertruck, it should go to the moon. No, there's a lot more that you want to look into, right? Now, let's go ahead and talk about a couple of things in this video. So, in yesterday's video, I was highlighting highlighted the 10-year treasury, right? And I know some individuals, they kind of get frustrated when I talk about economic data and other financial conditions like the 10-year treasury. And I said, hey, when the treasury 10-year is this high, well, this, pretty much offers selling pressure for equities. Well, why is that? Well, if you just do, if you were to take your Series 7, right, to become a stockbroker, one of the most common questions that you're going to get on that exam is, what is the safest investment? And the answer is always going to be treasuries. Now, in a real life scenario, is it 100% accurate? No, because what if the government gets nuked and they can't pay you back, right? But in a perfect world, right, treasuries, right, you invest in treasuries and you have this guaranteed return versus stocks, right, equities are not as guaranteed. And so when you have treasuries start rising up, well, that creates, selling pressure, because investors, they may start pouring their capital into something that's yielding a high return, and it's also very safe, especially when you start seeing stocks trend downwards. And so if I highlighted, hey, we want to start paying attention to the 10-year treasury note. Now, you don't have to have a Bloomberg terminal to go ahead and look at this data. There's several websites that offer the 10-year treasury note real-time data for free. For example, I'm looking at wallstreetjournal.com, right? And I often say that you want to have this, up while you're scalping, oftentimes, especially when you start seeing the treasury start peaking upwards. And you can't assume that it's static, because it does move downwards and upwards. For example, we saw that it started cooling off towards the last hour of the market, right? And I've highlighted that if we go ahead and let's look at something, right? Treasuries are reaching a peak, or they recently reached a peak, as if, once they were back in October, right? I think I worded that wrong. But what I'm trying to say is they hit a peak just as high as they were once back in October. Let's go ahead and take a look at the markets, right? Let's look at Tesla, in fact, right? Let's see what happened in October. Oh, wow, a lot of selling pressure took place. Now, is that the only reason Tesla stock fell during October, November, December? Absolutely not. There were several different data points and influences that caused Tesla to sell off. I mean, one of the main ones was we had Elon Musk, of course, sell a large portion to go ahead and fund the acquisition for Twitter. I mean, I could go on. There was tax loss harvesting, a lot going on. But then, towards the beginning of the year, we saw a lot of bullish optimism for Tesla. And this is something I've said for the Push and Profit program, and the members of the Push and Profit private group. And I've also said it publicly on YouTube that 2023 was going to be a two-phase year, where we have a year where we had this big rally, and then the second half of the year was going to be a different story, right? And so this is where we're at. And so, so far we talked about the 10-year treasury, but let's go ahead and talk about something else. So what else did we get today? Well, we saw that we had the leading economic index report come out today, and we saw that it ended up pretty much coming downwards again, right? And so what does this tell us? Well, this tells us that of course, while the markets are kind of experiencing or expecting this idea of a hard landing not really happening, well, the leading economic indicator is pretty much suggesting, well, things are still not looking good. So this is bad economic data, right? Not looking good. Now, this came out at 10 a.m. But what else did we have today that came out? Well, we also had the jobless claims that, this comes out weekly, and we saw that jobless claims pretty much fell downwards. And so what this depicts is that, we won't necessarily have a recession because, obviously unemployment and jobless claims, the labor market is still very robust. Right? And so we're still seeing people employed. You can't have a full-on recession when people are employed. That's not going to happen, right? And so what is the other scenario, right? Well, even if we have a tight labor market, we could still have an earnings recession, right? So we still have a couple of scenarios that still don't look good. Yeah, labor is looking strong, but we could still have somewhat of an earnings recession. So what do I mean by an earnings recession? Well, we still have interest rates, right, at a all-time high, right? Not all-time high, but the highest that they have been in over a decade, right? And so what does that do? Well, that puts some pressure on consumer pockets. And so I've highlighted for a while now that we want to pay attention to Walmart's earnings. Now, I know when I talk about earnings for other companies other than Tesla and tie it back to Tesla, I often get comments of people saying, oh, this is ridiculous. This guy's talking about Apple. This guy's talking about Walmart earnings or Microsoft earnings. This guy doesn't know what he's talking about. Well, listen, you have to have a holistic approach for the overall market. So, for example, let's go ahead and retouch on Apple's earnings. Apple beat its earnings, right? But as I often say, there's a lot of nuance for these earnings. And we saw that although Apple beat its earnings, we saw that the iPhone sales didn't do that great, right? They missed their expectations, iPads as well. And so we saw Apple sell off. Now, this is very significant because many individuals believe that Apple was too strong to fall, that it was going to lead the market, to continue going upwards. And in fact, we saw Apple sell off. Now, how does this tie back to Tesla? Before I get someone commenting, oh my God, this guy's talking about Apple, well, let's go ahead and understand something. Apple has a huge, significant weighting on a lot of major indexes, right? And so if Apple is doing bad, well, that's going to have an influence on a lot of these indexes, and they're going to start falling off, and that creates this negative sentiment for the overall market. So it's important to pay attention. But going back to Walmart now, I know someone's going to say, oh my gosh, he's talking about Walmart. Well, Walmart has been a focal point for my analysis for a while now. I've been saying this for a couple of videos, especially since Walmart is one of the largest employers in this nation, right? And so bad earnings would be bad because that could obviously suggest an impact to the labor markets. If Walmart, one of the largest job creators in this nation, has bad earnings, well, that could suggest that they may lay off labor, right? And so what did we get today? We had the Walmart earnings report come out right before the market opened. And in fact, we saw that Walmart actually did pretty well. Let's go ahead and take a look at this. So we saw that Walmart actually raises their full-year earnings forecast as grocery online growth fuels with higher sales, right? So what did we see from Walmart? Well, we saw that, and let's go ahead and go back to Tesla real quick. We saw that the same-store sales rose by 6.3%, which was over the 4% expectation. We saw that foot traffic increased by 2.8%, and there was a higher ticket growth of 3.4% in online sales. And we also just saw a positive uptick in 2.3% in their overall for the quarter for them, right? So these numbers suggest that the labor market's still going to remain very robust. And so what that means is, okay, well, the idea of a full-on recession doesn't look like it's going to happen. Why? Well, labor is still going to be strong. We had Walmart, one of the largest employers, have good data, good earnings, and it doesn't look like they're going to be firing all their employees as of now, right? So that's good, right? But what else did we see from the Walmart earnings, right? You have to look at things a little bit deeper. Okay, yeah, they beat their earnings. They also had positive forward guidance, right? But what else do we want to pay attention to? Well, the CEO, Doug McMillon, and I may have said that wrong, he said something pretty interesting. So he said, and I'm quoting this exactly how he said, they're looking for value, referring to the customers, right? And he said, and they trust us to be there for them. We see people across all different income cohorts come to us more frequently, looking to save money on everyday needs that give us an opportunity to drive conversions in more discretionary categories, right? Okay, cool. That's interesting that he said that. But what else did we see from Walmart? Well, Walmart also mentioned, and this is me quoting them, we've seen customers that are trading down from chicken and pork straight into chicken and ground beef from things like shrimp and steaks. And so what does that mean? I know definitely someone's gonna talk about this guy's talking about shrimp, pork, and steaks, and chicken, and talking about Tesla stock. Well, we want to parse deeper into what's actually happening. So what this suggests is that even though there's clear indications about a robust labor market, there's still evidence that consumer spending is moving towards a more economic habit, right? People are not buying steak and lobsters or any other expensive items when it comes to their groceries. And we're going to see that we're going to see this trend continue where we have a lot of Americans become a little bit more aware of their spending patterns, right, from what they typically do. And so we're going to be seeing like this trade down in luxuries. So a lot of companies that are selling luxury products are not going to do well as people are more cautious of how they're spending due to, interest rates still high, right? And inversely, companies like Walmart that are, obviously selling value, well, they're going to do well. And if you actually take a look into Walmart during 2008, the financial crisis, let's go ahead and take a walk down memory lane. And I know people are going to be definitely upset about this as I'm talking about Tesla, but I think it's important to have these conversations. So let's go ahead, and we went too far back. Let's go down to, okay, so 2008. So what did we see in 2008? We saw that Walmart actually continued moving forward in 2008. Why is that, right? We saw that, yeah, it took a little bit of a dive in 2009, but it still continued going upwards, right? It had some consolidation, but then continued going upwards during this time period. While a lot of stocks, if you actually look at a lot of stocks during this time period, it was definitely not like this strong recovery like Walmart. It took quite a bit more time before we saw a recovery in a lot of stocks. Well, obviously, during a recession, as we're seeing, with people with their spending patterns now, they choose to be more conscious of, finding value in what they're spending money in and saving. And so that's why we saw bad earnings from Target, but we're seeing good earnings from Walmart. Now, let's go ahead and bring it back to Tesla stock. So what else is something that we want to pay attention to? Well, let's go ahead and look at Tesla stock from a fundamental or technical perspective, right? So for a while now, I've been saying, hey, there's very little relative or volume relative to price around this area, right? This is the volume profile, which is different from your traditional volume by time. And I've said that, as there's little volume, and that means that there's less of an exchange between buying and selling, and we see selling pressure, well, that's going to move the order books down, and we're going to see a sharp decline. And that's exactly what we got. We got, a big red candle, right? And we had a gap and a big red candle. Now, what is something that we want to pay attention to? So I've highlighted this range for a while now, the 230 to 215. We broke below 230, and now we're hovering in between that range from 215. Well, this is the most pivotal area that we want to go ahead and watch for Tesla, because this is going to be the area where we actually finally find out if there's an opportunity to start buying, or if there's more opportunities to start shorting or selling, right? So look at this. So when we look at it from a technical perspective, we see that in the past, around this area of the low 200s has been a support, and then around over here has been somewhat of a resistance. So we're coming close to that area. And so I want to go ahead and pay attention to Tesla as we kiss that, $215 area, and I want to see two things, right? Is Tesla going to break below it? Or is Tesla going to start bouncing upwards, right? Because if Tesla touches that area and starts, having some positive confirmation of an uptrend, well, that's going to be when I finally buy some more Tesla in my long-term portfolio. Now, again, you guys should always do whatever you guys see value in. You shouldn't trade or invest based on what I say. You should always just do your own due diligence. But for me personally, I like to sell and buy, or let's just say this over again. I like to buy when things are discounted, but showing signs of, an uptrend, right? I don't like to just buy when things are falling down, right? Because you could end up catching a falling knife, as they say in the stock market, right? And so I like to wait, well, when there's value, but then we also see that things are looking optimistic, right? And so this is a very pivotal moment that I've been talking about for a while now. I know in the beginning when I was talking about this area, so many people kept, commenting like, oh, this is not going to happen. You're crazy. Well, guess what? Now we're here. It's been weeks of me saying this, and we are actually here now. And so this is where the game time actually takes place. This is where we actually want to see what ends up happening. Now, at Tesla, actually continue selling off, well, that's not going to be good news. But, if we go ahead and scroll back into the 10-year treasury, we see that, and let's go ahead and look at a 5-day view, right? We see that it's starting to cool off. So we may start to see somewhat of a relief. Again, we may see Tesla go down a little bit further to that 215, and we may start to see that bounce. And so that's the area that we want to pay attention to as the buying opportunity. And so does that necessarily mean that we're going to start going into all-time highs? No. Well, we want to see if Tesla ends up breaking above this descending trend line that has been an issue for a while now, because of course we want to see what happens in Q3 with the earnings. Again, stocks always start to revert back to their fundamentals, right? And that's one of the things that we also have to understand. Let's go ahead and look at the QQQ, the NASDAQ, right? We've seen that the NASDAQ, or the NASDAQ Index ETF, QQQ, has been selling off for now, and that's actually good. You want to see somewhat of a pullback to have a healthy market. It's not healthy for something to run up tremendously. I know people are used to the crypto gains that happened back during the pandemic, but in reality, for a stock to be healthy, you have to really align with the fundamentals. And the problem is, the higher up you start going, the harder it is to live up to the music or live up to the fundamentals, right? Because if a stock is trading at $600, but fundamentals are telling you that, hey, the company's earning this much, the earnings per share is this much, well, really it should be valued at, like, I don't know, $490. Well, then obviously we're going to see some selling pressure, because why is a stock trading at this high level, but then it's actually valued at that level? There's a discrepancy there. And so you want to exploit the opportunities between price, right, and value, right? And so that's something that we want to see. And so we've been seeing that, hey, a lot of these companies, even though they have been beating their earnings, we're still seeing the market trend downwards. And this is actually good. This is providing us a healthy buying opportunity, right? Obviously we took advantage of a lot of the selling that's been taking place, especially if you've been part of the Push and Profit private group. A lot of the members there have been taking advantage of all this selling that has been going on. But it's not that we're just forever going to be taking advantage of the selling. We're finally going to start seeing, well, are the opportunities of buying going to come in? And long term, the buying opportunities are going to be much more rewarding. You just have to be patient, right? Especially if you're a long-term investor. You have to be patient for things to, obviously come to balance. And so this is an area that we're going to be paying attention to for Tesla. I do expect Tesla to hold off, consolidate here, and possibly start reverting back upwards. But again, we have to stay data dependent. We could have some catalyst news coming out with the Cybertrucks pretty soon that could be positive or could be negative, and that's going to have a huge influence, because a lot of individuals are expecting that Cybertruck deliveries are going to be starting, and we're going to see a little bit of that reflected in the Q3 earnings, and we want to see that the Cybertruck deliveries are doing well. Now, if there's problems in, just issues with Cybertruck deliveries, or not being able to, manufacture enough of them to have any significant amount of deliveries, well, that's going to be an issue, right? And then, of course, in the earnings call from Elon Musk in the last earnings, we heard him mention that we're, most likely going to have a slight slowdown in production numbers, simply because they're upgrading a lot of the factories. Now, that's not necessarily terrible. I think that in the short term, that's bad, and that's obviously why we've been selling off. Or part of the reason, but I think long term that's great, because if a company is adding if Tesla's adding gigapresses, basically saying that they're going to continue scaling up with their vehicles, well, that's good for the long term, right? Especially because we saw that a lot of these legacy automakers, they can't even hold up. They're saying that they're going to produce this amount of cars, and then they're having to revise and say, oh, that's going to have to be next year, and then further pushing it back. And that's why, we're seeing that these legacy automakers are struggling, especially when it comes to the EV space. Yeah, they're still doing fine with their internal combustion engine vehicles, but as far as, what's going on with their EVs, it's not looking too good, right? Now, Tesla is much more better positioned. And so that's why I'm very bullish on Tesla, right? Especially because we're seeing states now basically say that they're going to start federally funding the Tesla supercharging network. And so even if these legacy automakers start kind of catching up with their EV vehicles, that's still going to help Tesla's bottom line. Although it may be a minuscule amount, it's still going to help them out. So definitely finally at a very pivotal moment, a very interesting moment for Tesla. Let me know what your thoughts are in the comment section below. Also, make sure to check out the links in the description below, because one of the links is going to be a link to the weekly newsletter. It's completely free, so if you can't join the Push and Profit private group, make sure to check out the weekly newsletter. This way you could get access to these emails I sent out every Sunday about what's currently going on in the overall markets. And with that being said, guys, I'll see you guys on this next video right over here. Take care, guys.